The president of the World Bank has stressed that governments need to lay out a clear regulatory roadmap to entice the private sector to invest in solutions to help combat climate change. Ajay Banga made those remarks in an interview with CNA's Elizabeth Neo on the sidelines of the Singapore FinTech Festival.
The first realization is you need the private sector because there's not enough money in the MDB system or governments or philanthropies to meet the ambitious requirements that we have. So you have to get the private sector, their capital, their ingenuity, their technology, their innovation into the game. If you think about renewable energy for a minute, let's discuss that. That's the first focus of the private sector lab. What we need to do is to enable investors who want to do renewable energy projects, to enable them to understand how to manage the risks that they do not know how to comprehend. So, for example, let's take a middle-income country where we now know that solar and wind energy are cheaper per unit than fossil fuel, but the capital put up front is higher and the gestation period of the project might be longer. But you know it's going to be cheaper, which means it's the right thing to do. And by the way, it's environmentally the right thing to do. So how do you get there? You need regulatory clarity. So if I'm going to invest in a country as an operator or an investor, I need to know that there is clear roadmap for renewable energy in that country. I need to know that they're committed to tariff policy, to distribution policy, to reforming the market mechanisms. If I know that, that's a risk I can deal with. I can deal with operating risk, management risk and the like. What I can't deal with is political risk. So MEGA, one of the outlets of the bank, offers political risk guarantees. I'm trying to expand that. So an investor investing in India or Indonesia or Vietnam or Mexico in renewable energy can get to buy political risk guarantees. And so they can apply a risk value to that. That's one problem. Another problem they have is foreign exchange risk. So if you're investing in dollars and euros, but you're getting paid by the utility in local currency, you're exposed to that foreign exchange risk. Some of these markets have deep enough foreign exchange markets to hedge. Some don't. Can I help there by helping to develop local currency markets over a period of time? So there's a series of things we have to do with the private sector on improving their feeling of managing risk as well as their access to these tools. That's what we're working on.
Mr. Banga, I need to talk to you about, the loss and damage fund. Last week, a U.S. climate envoy, John Kerry, he was in Singapore and he talked about, how the World Bank could be called upon to initially manage this fund. Now, there have been criticisms of the fund that it could possibly put developing nations at a new disadvantage because it would give, donor countries outsized influence over the fund. Now, the World Bank chief, you are chosen by the U.S. president. And the U.S. is one of the top emitters. Because there are concerns on how the World Bank is able to, discharge its duties objectively and fairly vis-a-vis this new fund. How would you respond to that?
So the first thing is the loss and damage fund is not going to be controlled by the World Bank. This is a misunderstanding. The loss and damage fund will be housed at the World Bank like an agency that will help them run it. We house a lot of trust funds with us today, but those trust funds are run by boards and by people who decide where the money goes. The group of 77 countries, as well as the donor countries, will be a large part of that board. The World Bank is not going to make its own decisions, either on how to raise money for the fund or how to use that money. All we will be is the agency that ensures that it's managed and managed with clarity. The actual decision-making will still rest with people from the group of 77 and the donor countries. So I'm actually less worried about that than other people are. I think most of it has to do with the misunderstanding of the fact that somehow the bank will decide who gets money and who doesn't. That's not the case in the loss and damage fund.